Good morning, good afternoon, good evening, wherever you are in the world. It is my absolute pleasure and privilege to introduce this FS Club webinar, sponsored and led by a very long-term supporter, active participant and friend of the FS Club, Mauritius, and specifically the Mauritius Financial Services Commission. We have a great program for you with a very exalted panel of speakers, and there will be time for questions at the end. So let me quickly run through the agenda, and then we can immediately launch into the event. So first of all, our speaker will be Mr. Prakash Siwunsudka, and please forgive my awful pronunciation of everyone's names. I'm sure my name is equally difficult to pronounce for other folks, but Mr. Siwunsudka will be delivering the keynote address, followed by Mr. Vishwadeo Sibaluk, who will talk about the legal and regulatory framework of VCCs in Mauritius, followed by Mr. Kamal Sang Barung, who will talk about the authorization process for VCCs, and those speakers are all from the Financial Services Commission, as is and then we will have experience from clients in the field. We have Ms. Salila Jiwulal, who will talk about setting up and operating a variable capital company in Mauritius. And Mr. Mohit Ralham will then lead with his experience, and we will have Mr. Fazil Sulu talking about the taxation and financial benefits, followed by the questions and answers. I will then briefly wrap up at the end. Well, having massacred some very nice people's names, I will now get out of the way, and I will be very pleased to hand over to Mr. Prakash Siwunsudka.
Thank you very much. Distinguished panelists and participants, ladies and gentlemen, a very good afternoon from the beautiful island of Mauritius, and a warm welcome to today's webinar co-hosted by the Mauritius International Financial Center and ZGEN on exploring the potential of variable capital companies in Mauritius. I am delighted to address such a diverse and worldwide audience, which underscores the growing interest on VCC structures offered by the Mauritius IFC. Mauritius, located at the crossroad between Africa and Asia, has consistently ranked as one of the top financial centers in Africa, demonstrating our robust financial infrastructure and regulatory environment. As we begin, I would like to provide some context and set the stage for our discussions. According to PricewaterhouseCoopers, the global fund management industry is projected to reach $145 trillion by 2025. This growth is driven by increasing investor demand for diverse and flexible investment options. As such, VCCs are uniquely positioned to capture a significant share of this expanding market. The introduction of VCCs in the Mauritius IFC is testimony to our commitment to innovate and provide a competitive edge to investors and global players. Indeed, in April 2022, the Mauritius IFC introduced the VCC Act, enabling the incorporation, conversion, or redomiciliation of funds as VCCs, complementing the existing structures used by asset and wealth managers such as trusts, partnerships, and corporations. The VCC Act provides that a VCC shall carry out its business through sub-funds and special purpose vehicles which may have a legal personality that is distinct from the VCC. A VCC is licensed by the Financial Services Commission Mauritius as a VCC fund pursuant to the VCC Act. As at date, the FSC Mauritius has issued 20 licenses to VCCs, for which 49 sub-funds were authorized as collective investment schemes and 15 sub-funds as closed-end funds. So, what exactly makes the VCCs offered by the Mauritius IFC such a compelling proposition for the global investors? Mauritius VCCs offer an unparalleled operational advantages, including enhanced flexibility and efficiency in fund management, while addressing the needs of investors and fund managers. Indeed, they allow for the seamless pooling of assets and diversification of investment strategies. The structure of VCCs ensures that the assets and liabilities of each sub-fund are ring-fenced. This segregation provides a robust layer of protection for investors, mitigating risks associated with cross-liabilities. Mauritius VCCs offer an attractive option for fund managers and investors seeking to optimize their portfolios while ensuring robust governance and compliance. They also allow for the issuance and redemption of shares without regulatory approval, significantly reducing the administrative burdens and enhancing operational efficiency. This streamlined process is crucial in today's fast-paced investment environment. Moreover, the Mauritius IFC offers an attractive tax regime for VCCs, including a flat corporate tax rate of 15%. The Mauritius IFC further provides access to a network of double taxation avoidance agreements with over 40 countries and investment promotion and protection agreements with 46 countries. These benefits make Mauritius a highly appealing destination for establishing VCCs. In conclusion, the introduction of VCCs in Mauritius represents a pivotal moment for our financial sector. It aligns with our vision of becoming a leading international financial center, offering innovative and competitive solutions to the global investment community. I encourage all of you to engage actively in today's session and explore how VCCs can benefit your investment strategies and business operations. Thank you for your kind attention, and I wish you a productive and insightful webinar. Thank you very much.
Thank you very much indeed, Mr. Siwasonka. It is now my pleasure to hand over to Vishwadeo Sivalu, who is going to talk about the legal and regulatory framework for variable capital companies in Mauritius.
Thank you very much, Hugh. Good morning, good afternoon, and good evening, everyone. It is indeed my pleasure today to address you through this forum on the experience of VCC in Mauritius. As my opening remarks, it's important to highlight that the VCC was part of the budget measure 2020-2021 in Mauritius, and to give effect to that budget measure, a working group was set up comprising of representatives from the FSC, Mauritius Finance, distributors, and law firms. Next slide, please. Yes. And we also engage with other key stakeholders, for instance, Ministry of Finance, Ministry of Financial Services, the Mauritius Revenue Authority, and the resource companies in Mauritius. So next slide, please. So the first question that we need to address is, what is a variable capital company? Under the VCC Act in Mauritius, there is a simple definition being given to a VCC. It is simply a body corporate, that is, a company, which carries out its activities through its sub-funds and special purpose vehicles. Now, second question that we need to address is, what are those activities permissible under a VCC? So, first, a VCC may operate as a VCC fund. Second, a VCC may operate as a family office. And third, a VCC may also be engaged in other activities as specified in FSC rules. Next slide, please. Next slide. Yeah. Thank you. Since the focus is on VCC fund, again, let us have a few words on this structure. So for the VCC fund, it should be a body corporate. It needs to be authorized by the FSC as a VCC fund, and it needs to carry out its activities through its sub-funds and special purpose vehicles. And what is important in this VCC fund structure is that the VCC fund, as well as the sub-funds and special purpose vehicles, that is SPVs, need to have a common promoter. Next slide, please. Now let us look at the activities of the sub-funds. Since the VCC needs to carry out its activities through its sub-funds, so definitely the VCC needs to come to the Commission for the approval of one or more of its sub-funds. And these sub-funds are going to be authorized as collective investment scheme or closed-end funds. And the sub-funds may elect to have a separate legal personality distinct from that of the VCC fund. Next slide, please. For the special purpose vehicles, again, the VCC may operate one or more SPVs, and these SPVs would be required to be approved by the FSC. Very important here that I want to highlight is the SPV cannot operate as a fund. The SPV should be a vehicle ancillary to the VCC fund or a sub-fund. And same like for sub-fund, the VC may elect to have a separate legal personality distinct from that of the VCC fund. Next slide, please. As you can see on the slide, so you're going to have the VCC fund, and then one sub-fund being operated as a CIS, second sub-fund being operated as a closed-end fund, and third, you can have an SPV, and the sub-fund closed-end fund can invest into the SPV. This is possible because under the VCC Act, there is cross-investment is permissible. That is, one sub-fund or SPV can invest its assets in another sub-fund or SPV. So definitely this is really a flexible structure for funds purposes. Next slide. Thank you. Now let's look at some of the key features for the VCC fund. First, let's start with the name. The name of the VCC fund should include the words Variable Capital Company or VCC as its suffix. Second, it is mandatory for a VCC to have a constitution, and that constitution should be in compliance with the Companies Act in Mauritius, and it should be also clearly spelled out that the object of the VCC fund is to operate as an investment fund vehicle. Third, conversion is permissible under the VCC Act. That is, an existing company can convert to a VCC fund. Fourth, companies or funds which are set up outside of Mauritius can continue by way of registration as a VCC fund in Mauritius. Next slide, please. On this one, what is important, if we are dealing with sub-funds or SPVs that have legal personality, the registered office as well as the secretary and management company of those sub-funds or SPVs must be the same as the VCC. Next slide, please. When it comes to the board of directors of the VCC can share the same board of directors with the sub-funds and SPVs, unless the constitution provides otherwise. For the functionaries, the VCC fund will be appointing single functionaries for all sub-funds and SPVs. For instance, a single CS manager, custodian, administrator being appointed for all the sub-funds and SPVs. On the part of AML-CFT, and the motion AML-CFT legislations, it is the VCC fund which is going to be the financial institution. Hence, the appointment of MLRO, that is Money Laundering Reporting Officer, Deputy MLRO, and Compliance Officer will be done at the level of the VCC fund and not the sub-fund or SPVs. Again, another key feature here. And now, if the VCC fund wishes to operate as a global business corporation, only one single global business license will be required to be held by the VCC fund and not by the sub-funds or SPVs. Next slide, please. Other key features under the VCC Act. The VCC fund needs to keep separate records for its operation as well as separate records for all its sub-funds and SPVs. The assets and liabilities of the VCC fund as well as those of the sub-funds and SPVs are segregated. What this ensures is that tomorrow the assets of the sub-fund or SPV cannot be used to settle the liabilities of the VCC fund, nor settle the liabilities of another sub-fund or SPV. When it comes to legal proceedings, if tomorrow there is a legal proceeding or no judgment against one particular sub-fund or SPV, that legal proceeding will be restricted only to that particular sub-fund or SPV. Next slide, please. For the financial statements, the VCC fund will prepare its financial statements under the IFRS, US, UK, Singaporean GAAP. Only one set of AFS will be required. In the event that the sub-funds are having legal personality, then under the law, they'll be required to prepare a separate set of financial statements. Next slide. In the event that one sub-fund or SPV decides to wind up, the SPV or subfund needs to submit a winding up plan to the Commission. Definitely, the Commission will have to approve that winding up plan, and while doing so, the Commission needs to ensure that the interests of participants are secured. Next slide, please. I think on this note, this has been On this note, this has been a pleasure sharing the high-level overview with all of you. As concluding remark, I would like to say that the VCC has really unique features in the Mauritian context as well as international context, and definitely there are lots of flexibilities that fund promoters can look at while showing their fund business in Mauritius. Thank you all for your kind attention.
Thank you very much indeed, Mr. Sivalak. Now, my great pleasure to hand over to Kamal Singh Burun, who is going to talk about the authorization process of variable capital companies in Mauritius. Mr. Burun.
Mr. Burun. Thank you. So, a very good afternoon to all attendees, or good morning, depending on the time zone. I am delighted to provide you with an overview of the licensing process for variable capital companies in Mauritius. I head the Authorization Directorate at the Financial Services Commission Mauritius. The Directorate processes all the applications submitted to the Commission and recommends the applications to an application committee for determination. Next slide, please. Yeah, so as part of the agenda today for authorization, I will take you through the VCC structures, potential use cases, and applicable fees. My presentation is bound to overlap a bit with my colleague a bit, as we operate within the same legal framework. So I will walk you through the application and authorization process, the key factors we consider prior to granting an application, and we will give you a high-level overview of our internal processes while determining applications. Finally, we'll share some statistics on the VCCs. Next slide, please. So right to the structure, my colleague spoke about the VCC fund. So if you look at the top, the structure consists of the VCC entity itself, commonly referred to as the VCC fund. When submitting an application for a VCC, the application should also include an application for at least one sub-fund, and the applicant can subsequently apply for other sub-funds. The structure can also have SPVs, but the SPVs must be incidental to the fund. The applicant can choose to either incorporate or not to incorporate the sub-fund, and this is one of the highlights of the legal framework. Therefore, the structure essentially can have incorporated and unincorporated sub-funds. The VCC and the sub-funds can have the same board or different boards for incorporated sub-funds. Once a VCC fund has been licensed and the same board is being replicated for the new incorporated sub-funds, the stakeholder management tool on FSC1 platform, which is our strategic portal for submitting applications, will allow linking of the same individuals to the new sub-fund, which results in time saving for the applicants. Sub-funds can either be collective investment schemes or closed-end funds. Collective investment scheme can either be a global scheme or an expert fund, essentially with minimum subscription of minimum subscription of $100,000 or a professional CIS targeting sophisticated investors. A closed-end fund, on the other hand, can be categorized as a professional CIS, essentially targeting sophisticated investors or a reporting issuer. A sub-fund can opt to be a self-managed scheme, or it can appoint a CIS manager to manage the fund. Since the legislation came into force a couple of years ago, we have seen quite a significant interest in the VCC structures. Of course, within the ecosystem, there are other functionary service providers that, as part of the application, details of whom needs to be submitted. For example, the custodians, the CIS manager, and the CIS administrators. You'll see on the right-hand side, there's a mention of the family office. So in 2023, the VCC Act was amended to accommodate family offices to allow family offices to use the VCC structure. Now, the details of this framework are yet to be released. It is still under consultation with the industry, with practitioners to basically optimize the use cases. So this is a space to watch. Next slide, please. So in terms of fees, the processing fee for a VCC fund is 1,000 USD for global companies, or 45,000 Mauritian rupees for a domestic company. This includes the application for the first sub-fund. For each additional sub-fund or SPV, the fee is 500 USD, equivalent of 22,500 Mauritian rupees for domestic companies. Once the fund is licensed, the annual fee kicks in, and the VCC, the annual fee for the VCC is 3,000 USD. This includes the annual fee for the first sub-fund, and then for the second to the fifth sub-fund, the annual fee is 1,000 USD, the Mauritian equivalent of 45,000 Mauritian rupees for domestic companies. For each additional sub-fund onwards, the annual fee is 1,950 USD, or 87,750 Mauritian rupees for domestic companies. If for each sub-fund authorized to operate as special purpose funds or REITs, real estate investment trust, there's an additional annual fee of 5,000 US dollar to be paid, which is 225,000 Mauritian rupees for domestic companies. Next slide, please. Yeah, so in terms of submitting the application, applications are submitted on our strategy portal, which is the FSC1 platform. Once the entity is licensed, then subsequent applications will be submitted on the same platform, but also post-licensing. Post-licensing applications are expected to be done on FSC1 platforms, such as change in officers, change in shareholders, and submission of financial statements, for example. Global business companies have to submit applications through a management company licensed by the Financial Services Commission. For domestic companies, the companies need to be incorporated prior to submitting the applications, which is not the case for global business companies. The licensing criteria can be found on our website, www.fscmauritius.org, and we start processing the applications once the processing fees are paid and the payment is done via the FSC1 platform. Next slide, please. So I'll take you very quickly through the factors that we consider while determining an application. So the Commission will consider the fitness and probity of the officers and the shareholders. This includes assessing the character, experience, and skill set of the shareholders and officers. We'll consider whether there is adequate governance to ensure that the funds are adequately managed and the structure is sustainable. We will consider the strengths of the board and the decision-making process. Investor protection is at the core of what we do, and we will expect that adequate disclosures, including risk disclosures, have been made in the PPM or the offer document. We will expect adequate AML CFT procedures and controls to be in place, details of MLRO, DMLRO, and compliance officer to be submitted in compliance with the local AML CFT legislation. And the Commission has an obligation to consider whether granting an application will bring any reputational risk to the jurisdiction. So that is also one important factor that we consider. Next slide, please. So I'll very quickly take you through the decision-making process. So once the technical team in the authorization directorate concludes that the application meets the licensing criteria, the application is submitted to an application committee and the commission. The application committee itself is composed of senior members of the commission. A decision is taken as to whether to approve the application or to request further information or not to approve the application. If an application is not approved, it is escalated to the board for ratifying the decision. The board can approve that recommendation or can refer back the application to the technical team to reassess or to seek further clarification. There are some applications which are considered strategic, like securities exchange applications or investment banking license applications that automatically go to the board for ratification. Next slide, please. So just to close on my presentation, just a few figures on the screen. Since the inception of the framework, for the year ended 30th of June 2023, we had authorized 4 VCCs, including 5 sub-funds, and during the year ended 30th of June 2024, we have authorized 19 VCCs with 58 sub-funds. The average processing time for complete applications has been 13 days. Obviously, from the time when the application is submitted and for all the queries to be answered, that takes a bit of time. So that the average time has been 70 days for the period ended for the year ended 30th of June 2024. So basically, if the application is complete, we will definitely take lesser time. We have cases where applications have been approved within 13 days. In other cases, applications have taken more time. That will be all from me. Thank you.
Thank you very much indeed, Mr. Varun. We have now heard some extremely helpful presentations from the Financial Services Commission describing the legal regulatory framework, the process for application and authorization. But the proof of the pudding, where the rubber hits the road, is in practice. And I'm absolutely delighted to introduce Sachita Jiwalal, who's the Director of Client Services for Apex Group, and she's going to talk about what is it like when you actually do set up and operate a variable capital company in Mauritius. Thank you.
Thank you. Good morning, good afternoon, dear audience. I'm Sachita, as mentioned here, a Director of Client Services at Apex Mauritius, which forms part of the renowned global administrator Apex Group. Amongst the multitude of services we provide at Apex Mauritius, we proudly offer setup and ongoing administration of global business structures such as the Mauritius variable capital companies. So Mauritius has had its VCC for decades, which did serve its purpose and will continue to coexist with the new VCC, our Mauritius VCC, which we like to call the VCC Plus, since it does have added and enhanced features compared to any other VCC or similar products. Having listened to our previous speakers, you would have grasped the key features of the Mauritius VCC, which makes it such a unique offering. I'll spend the next few minutes emphasizing on certain key differentiators which make the Mauritius VCC so appealing. Next slide, please. First of all, the VCC via its sub-funds allows for each of them to have a different investment strategy. This means within a same VCC structure, a promoter can have a private equity closed-ended strategy, an open-ended hedge strategy, or a debt strategy. Next slide, please. And by so doing, the promoter or investment manager retains its track record within the same structure. It also becomes more efficient in terms of governance, regulatory, and compliance costs. The second unique feature we heard about is the ability for each sub-fund of the VCC to opt to have a separate legal personality, meaning it gets separately incorporated, has its own name, has its own set of assets and liabilities, totally ring-fenced from the rest of the VCC and other sub-funds. This is actually a big plus for the Mauritius VCC, as it also helps the promoter in implementing different investment strategies using sub-funds within a same structure, and at the same time providing legal ring-fencing of assets and liabilities to its investors. With separate legal personality, there is no risk of cross-sub-fund contagion. That's very reassuring if you are an investor in terms of protecting your stakes, as well as you as an investment manager, especially if you have chosen different investment strategies within the structure, which may eventually have different performances. And linked to the separate legal personality benefit is the third VCC feature. By being separately incorporated, coupled with the flexibility allowed by the Act, a sub-fund can spin off into a separate fund as an exit strategy or as part of a restructure. Clearly, the Act has really thought through, considered all aspects of a fund structure over its whole term. Next slide, please. So a few more interesting and practical features of the Mauritius VCC are set down here. For instance, from a governance perspective, each of the sub-funds can either have same board members or they can choose to have distinct board members. It's all very flexible according to the investment manager's needs. The MLRO, AMLRO compliance officer can be at the VCC level, and we expect the regulatory inspections also to happen at the VCC level. With compliance retained at the VCC level, there is scope for efficiencies. The regulatory and licensing fees, as you have seen, are also lower compared to traditional fund structures. The structure thus is expected to bring some savings in operational costs compared to having multiple traditional structures. From an accounting perspective, each sub-fund can adopt a different accounting standard. So US GAAP for a sub-fund with US investors, IFRS for sub-fund with European DFI, which is so convenient. And there is certainty about the tax treatment for each of the sub-fund and the VCC. Our next speaker will surely elaborate on that. And another interesting feature of the Mauritius VCC is the ability to house various types of structures and the ancillary vehicles. For instance, a private equity sub-fund can have multiple SPVs under it, and the sub-fund being the shareholder. It can also have a co-investment vehicle where the sub-fund invests alongside one of its investors. After some time, when the PE wants to have a follow-on fund, the follow-on fund can be within the same structure as sub-fund 2. Another structure that could be a tax-exempt special purpose fund could be set up as a sub-fund within the same VCC. You can also fit a master feeder structure in the VCC. The Act, as mentioned by Mr. Boran, has further allowed the VCC to operate as a family office through an SPV. So the structuring opportunities using the VCCs are simply massive here. Equally attractive, we heard from, again, the regulator, is the license approval time in Mauritius for a VCC, which can be between 6 to 8 weeks. I heard 13 days as well, which is very encouraging, but which in certain jurisdictions can take up to 3 to 6 months. And once the first VCC and its sub-fund has been set up, the subsequent sub-funds are generally a relatively seamless exercise. So as you can see, there are substantial benefits from use of the Mauritius VCC structure. So procedure-wise, I'm going to probably recap some of the points mentioned earlier, but that's expressly done so that we pick up the important points. So the application for the VCC goes on the FSC1 platform, as is the case for any traditional GBCs that we would do. The VCC would apply for a global business license and apply for creation of at least its first sub-fund simultaneously. The application to the Registrar of Companies is filed separately on the CBRACE platform for the VCC and for the subfund. The FSC approval is to be sought for creation of any new subfund and SPV, and the board of the VCC is expected to also approve them. In terms of ongoing obligations, so by virtue of being a global business license, the VCC will need to demonstrate that it is centrally managed and controlled from Mauritius, just like any other GBC has to do. So it has to carry out its SIGA from Mauritius, and be managed and controlled from Mauritius, and administered by a management company in Mauritius. Plus, given that the VCC is an FI, it will also have to put in place and abide by obligations of an FI, like governance measures, appointment of officers, insurance covers, demonstrate expertise of the management team, and so on. So we talked a bit about the governance earlier, MLRO, AMLRO, compliance officers, independent audit. This will all be at the VCC level. Next slide, please. They will need to have appointments at each subfund level, though in cases where they choose to have separate legal personality. The officers of the VCC and the subfund can be common. The company secretary, the management company, and the registered office are expected to be the same. The functionaries can be the same or different. The VCC and the subfund can choose to prepare a single financial statement. That will depend very much on whether a separate legal personality has been chosen or not. Next slide, please. So in a nutshell, next slide, please. Next slide. Next slide, please. So let's go to the picture. Yeah. So this is in a nutshell our VCC with all its benefit, reduce regulatory cost. So for the setup of some of the VCC, you would say the proof of the pudding is in the eating. So yes, at Apex Mauritius, we proudly share we have already set up 4 VCCs. Fifth one is in progress. And one of our valued partners, Mr. Mohit, will share some of his perspectives in a while. But just to mention, when you are setting up a VCC, the number of subfunds can be unlimited. So for one of our VCCs that we set up, we already have 8 subfunds created for it. So before I pass on to our next speaker, I'm hoping that by end of today's session, all stakeholders listening are fully convinced about the uniqueness of this offering and more comfortable to consider the Mauritius VCC for your next structure. And why not convert or redomicile your existing ones? I hope our investors are more reassured by the agility and robustness of the legal and governance framework proposed under this structure. And promoters and investment managers, I hope you're convinced of the flexibility and operational efficiencies provided by this structure whilst maintaining an element of perpetuity to your track record. I'm sure next speakers will only reinforce your conviction. Back to you.
Thank you so much, Ms. Jeevalal. Extremely interesting. Well, now I'm delighted to continue the industry theme and introduce Mohit Rauhan, who is the Group CEO of the TIW Capital Group, to continue to describe the industry experience of using the variable capital company structure.
Thank you. Greetings to everyone. Good morning and good afternoon to everyone. Next slide, please. So just to set the context, I've been in the fund management space for 23 years. TIW Capital Group, we manage $700 million US of asset under advice. We are present in 10 countries, including in UK. We have fund structures in multiple jurisdictions. So I'm going to straight away talk about why we believe and we are excited about the good work that the Mauritian regulator is doing and the ecosystem is supporting the administrators, the banking architecture in general. So to start with, while I have just 2 slides, I think the idea is to explain from an end use point of view how we see it given our experience of having dealt with multiple jurisdictions. We have fund structures in Singapore, we have filed a structure in DIFC in Dubai, and we do have structures in India as well. And of course, in Mauritius, we have been operating for the last 23 years. I can say across funds I've been with, including some very, very marquee sovereign funds globally from Western Hemisphere, we have seen money going back easily and flow back without any hassle, without any tax problems to investors in a very successful way. So the most important point I want to start with when anyone thinks of any jurisdiction is the approval process and the speed and the clarity. I must say, having dealt in 4 different jurisdictions, and some of them are extremely reputed, I must again say that why this is important is because Mr. Burun spoke about 13 days to 70 days in terms of application approval. There are certain jurisdictions without naming. We have seen almost 8 to 9 months for the process to actually consummate. Now, typically imagine if you set up teams, you incur costs, you get seniors, you get fund managers, you want to market, you've gone to the market and got distributors to agree to distribute, and then you get frustrated to see the license coming after 3 quarters. I think that's a very, very important point, and kudos to the regulator and the ecosystem to give this benefit. We have been beneficiary of it. We have multiple sub funds. We have independently funds that are close-ended. We have funds in Mauritius that are open-ended expert fund. We have a fund that is a reporting issuer. The current VCC structure we also have joint ventures in it with different partners. All of that we have been able to do because of the ease of operation and the speed of execution. So that's the first point I would, like to talk about. So now the other important thing, I think, if you look at the second point, is the ease of doing business. The ring fencing part that everyone spoke about, there is a pseudo personality that you have associated with different sub funds, but the ring fencing in Mauritius is far more powerful. You can actually have a completely independent legal personality with independent rights, independent, obviously, assets and liabilities. And as obviously, Ms. Jivulal spoke about, I really want to re-highlight that the independent boards for different sub-funds. We have joint ventures in UK, where we have a UK partner who has retail UK FCA license. Those who are on the call would know that it's very difficult to get a retail UK FCA license, and we have filed with the regulator of sub-fund with them as a partner. So because of this unique feature, we are able to get different partners under the same VCC umbrella. We also have US investors through one of our sub funds, and we are able to issue K1 forms to these US investors through this. So in terms of different client base, we have seen 30 different countries investors we have been able to cater to. And for the last few decades, as I said, I never had a hassle of from either banking point of view or taxation point of view or ease of operation point of view. Coming to the ecosystem, I think any fund manager needs support of banking services, of the administrator, custodians, and in general the auditors, the obviously calculations of net asset value for reporting purposes. I think that's again personal view. Mauritius scores extremely well. I've lived in Singapore, and we have funds in Singapore, and I can tell you, compared to Singapore, Dubai, I have no qualms in sharing this, that the banking ecosystem is far more efficient in terms of speed. At times, in some of the jurisdictions, it takes even 3 quarters after getting approval from the regulator to open a bank account, which means the banking system and the regulatory system is not talking to each other well. You can Google yourself and read the horror stories the fund managers go through in some of these jurisdictions to get banking account, operationalization done. And in Mauritius, it is extremely sweet, very simple, and easy to do. So as a summary on this, ring fencing of products, multiple jurisdiction joint ventures you can do through different sub funds, have different board members, differentiated strategies. You can mix open or close-ended funds. You can have private equity and listed market architectures. We have gone ahead and listed our funds even on platforms like All Fund, which allows us to actually get money through omnibus channels. ease of doing business in terms of approval process of the regulator, the variety of choices, that's there. I also made 1 or 2 points notes when both of them were talking about for further action in few like family office is a new concept. I know it's in consideration, but it could be very sweet again to look at. And lastly, importantly, the entire ecosystem of custodian, the NAV calculator calculation and reporting. Next slide, please. So just as a summary, this is how we have seen, this is our experience, I would say, as a fund manager with the Mauritian, regulator and the ecosystem compared to our DIFC and our Singapore structure. I have no qualms again in saying that the approval timelines is few weeks. I mean, we just did a joint venture with someone in UK, and it hardly took us 5 to 6 weeks to operationalize that. In Singapore, it would have taken me 3 quarters, and likewise in Dubai, maybe 2 quarters. Ease of doing business, hence it's extremely high. Banking system is super supportive. Uh, Again, it takes hardly few weeks to get operationalization done. The tax efficiency is phenomenal because, as I said, I can confirm to you in my previous funds, we had at least 5 sovereign wealth funds who were invested, and they invested to the Mauritius route. And there's a large bank from Southeast Asia who's actually, instead of going with the local jurisdiction, has actually invested with us through Mauritian jurisdiction. It's very ironical. In terms of costs, it's extremely low compared to other benchmarks, and hence I believe, in nutshell, the Mauritian VCC structure is worth exploring. It's a flexible structure with extremely fast approval process, with a strong ecosystem at low cost, and with multiplicity of things that you can do as a potential fund house, whether you're small or you're large. Thank you for having patience to go through.
Mr. Alhan, thank you very much. Now we've heard some fantastic industry validation and confirmation of the tremendous position and picture there is for variable capital companies in Mauritius. But of course, no picture is complete without the inevitable consideration of tax. And I'm delighted to introduce Fazil Sefan, who's a partner in international tax at Anderson, who will describe the tax considerations for variable capital companies in Mauritius. Thank you very much.
Thank you very much. Good day, everyone. You pointed out rightly, it wouldn't be complete without a little spiel on tax, and I'm glad to present that one. As we've heard from the various speakers, I mean, it's clear that there's some key messages that come out. I've heard tax certainty of the VCC. I've heard very smooth tax process, and indeed I can confirm that. And through the next 3 or 4 slides, we'll go into a bit more detail as to what the taxation of the VCC in Mauritius involves. The variable capital company has its own legislation, but the Income Tax Act in Mauritius, which is the main piece of legislation that governs the taxation of companies, has been adapted and amended to incorporate certain features of the VCC. So hence, the definition of company under the Income Tax Act has been extended to include the VCC, the sub-fund, and the special purpose vehicle under it as well. And as many of you may be aware, in Mauritius, the taxation of companies, the tax rate is a flat 15%, whereby a company is liable to income tax on its chargeable income. I'll talk about certain exemptions that are available in a few minutes, but typically chargeable income means all taxable income minus any allowable deductions. Now, when we're talking about a VCC, typically operating as a fund, the type of income that it will generate will be along the lines of dividend, interest, and capital gains. And as you know, very nicely, there's no capital gains tax in Mauritius. So that's one thing less that the fund and the investors have to worry about. Next slide, please. Now, when we look at the taxation of the VCC and the underlying sub-fund and the SPV, even though the headline tax rate is 15%, all these different entities are enabled to benefit from the foreign tax credits that are available in Mauritius. So any foreign taxes that have been suffered on dividends coming from overseas or interest can be treated as a credit in Mauritius, so that you can reduce your tax rate effectively to nil if you've got sufficient credits. Now, alternatively, so separate from the tax credits method, we've got the partial exemption method or scheme, which has been in place for a few years now in Mauritius, and which investors and taxpayers are very familiar with, whereby 80% of the income arising on certain income streams is exempt from tax. Now, the great thing is that the VCC, being a body corporate and being a company under the Income Tax Act, can benefit from these types of exemptions just like a normal company. Next slide, please. So the sub-funds of the VCC, since they can operate as a CIS or a closed-end fund, they can benefit from the 80% partial exemption that's available to the CIS and the closed-end fund, and thereby 80% of their income would be treated as exempt, so they would only be taxed on 20% of their income at the headline rate of 15%. And note that there's a special, a higher level exemption of 95% for interest. That's a specific one which has been introduced more recently. Of course, there are certain conditions to obtain these exemptions. The core income generating activities, the SIGA, as mentioned by Satita earlier, and some conditions around ensuring that there's a minimum employment, some employment conditions are met in Mauritius, and a minimum level of expenditure that has to be incurred. Now, we often get the questions about employment. The employment can be direct, as in directly people who are employed through the fund and the sub-fund and the SPVs, or indirectly through service providers or consultants in Mauritius, as long as they're fulfilling the core activities in relation to those to the fund and the sub-fund. Now, if we're talking about an SPV which doesn't have a fund license, now the SPV, as and when it receives dividends or interest, it can also benefit from the 80% partial exemption, because these two types of income are eligible for that exemption, or it can go down the foreign tax credit route, as I mentioned earlier. So in a nutshell, the point to take here from these slides is that the 80% partial exemption is very much available to the VCC and to the underlying sub-fund and the SPV, depending on the type of income being generated. And this is it's a great advantage that the VCC offers in terms of the tax rate and, in fact, tax attractiveness in Mauritius. Next slide, please. Now, and this point on the special purpose fund, this was raised again by one of the fellow speakers, is that one of the sub-fund may apply to the FSC for an authorization to act as a special purpose fund. And this is a particular type of exemption that's available, subject to certain conditions being met. So this shows the flexibility of the VCC in having different types of sub-funds to cater for different types of investments and different purposes as well. Next slide. Now, we saw earlier in the presentation that the VCC can have separate legal personality. And if the VCC so chooses to have this separate legal personality, it will prepare separate financial statements and will have to file separate income tax returns. And each entity, so the VCC on one side, the sub-fund, the SPV, will be liable for their own taxes. And should there be any taxes due, the tax authorities here, the MRA, will seek to recover the taxes from each of those respective vehicles. Now, in the situation that the VCC does not have separate legal personality, there's two options. Either the VCC prepares consolidated financial statements, so a single set of return is sufficient for all the entities. The advantage here is that losses in one SPV or in a sub-fund can be used to offset profits arising in the other SPVs and sub-funds, thereby achieving overall tax efficiency. But of course, it's a single return, and the liability to tax is on the whole unit. Or even though the VCC has separate legal personality, it can elect to present separate financial statements, and in that case, only the SPV or the subfund will be liable to their relevant share of income tax. So as you can see, there's a lot of flexibility within the structures, both from an operational perspective and also from a tax perspective. And the VCC, subject to meeting the relevant conditions, will be considered tax resident in Mauritius as well, and therefore benefit from or eligible to apply and receive a tax resident certificate that would enable it to benefit from certain tax treaties that Mauritius has signed. So I know this was a quick breeze through of the tax elements, but that's the time that I had, and I hope that was helpful. If you have any questions, more than happy to take them, in the Q&A or also the subsequent. Thank you.
Thank you very much, Mr. Seifu, and that does neatly bring us on to questions and answers. And we have some fantastic questions from the audience, and we will work through as many of them as we can in the time available. So perhaps I can kick off with a question from Anton Farlenkov, who says, hello, thanks a lot for the webinar. Question, what are the benefits in terms of cost, timing, compliance, sharing audits, sharing bank accounts, and launching VCC cells as compared to launching a full-blown general partner limited partner fund? And I suspect that's something to hand over to the Financial Services Commission.
We are referring to the cost of operations here. I guess that question would be better targeted to Satita in terms of compliance and everything.
Yeah, I think I can take that one, huge. So overall, the cost is expected to be lower. Not just the regulatory cost. We have seen the detailed regulatory cost is lower for setting up the VCCs and the ongoing fees as well. But the fact that the governance can be at the VCC level. So the compliance officers, the AML officers, the AML audit, the FSC inspection, these are all going to be at the VCC level. So there's expected to be additional savings in terms of cost for the VCC as a whole. I think you also mentioned the timing in terms of setup and incorporations for the structures. So while you set up a traditional structure, I think you are setting it up as a standalone, while you are doing it under the VCC as a sub-fund. So once the VCC and the sub-fund is set up, it becomes like known to the FSC and very much easier to roll out roll on your second sub-fund. And as I mentioned earlier, the process is more seamless when you are setting up second, third, fourth, and other ancillary vehicles within the structure, because all the KYC documents of the funds remains within the platform of that specific application. I hope I have answered the question, George.
That's really helpful. Thank you so much. And just in terms of our questions, Chirag Pathak asked a very similar question, and I hope that answer helped. I've now got 3 questions around the phrase incidental in terms of the special purpose vehicle under VCC, and a couple of other related questions which I will find. Asking, this is from Noshir Amandi, is the SPV incidental to the VCC or incidental to the sub-fund? And just scrolling through the questions here. Well, let me say there is another one. Oh yeah, could you please give an example of an SPV that would be considered as incidental to a sub-fund under a VCC? So that trio of interest kicked off by the phrase incidental.
I think this one I can take with you. So, like we mentioned, the SPV should be incidental to that of the sub-fund. What means is, like I've shown in the diagram earlier, so the SPV can operate as a financial institution, that is as a fund, but it can be be incidental, that is, can only do investment holding. If you're having a sub fund as a closed-end fund, so that closed-end fund will definitely use SPVs to channel its investments. So then it can use that SPV to channel its investment. So this is where I mentioned earlier, the SPV is really the investment holding vehicle. So yeah, I think this is the quickest example that I can use here.
Thank you very much.
To answer the question, is
yes.
incidental to the fund. Yes, the message.
Super, thank you. Questioner here who asked to remain anonymous. What are the listing requirements for an SPF under the VCC structure?
So not listing requirements. SPF essentially grants certain tax benefits, which I think it allows. You want to take it?
Yeah, I can add, because what happened for the special purpose fund, because in the motion context, all funds are authorized either as collective investment schemes or as closed-end funds. Then there are further classifications in terms of the regulation. For instance, one CIS can be further classified as an expert fund, or closed-end fund can further be classified as a professional fund. So likewise, you have this particular classification, what we call the special purpose fund. So then there are specific requirements for a particular fund, which is already authorized as a CIS or expert fund, to be further classified as an expert fund. So the requirements as per the rules are that that fund should be offering its shares solely by way of private placement to investors having competency, significant experience, and knowledge of fund investment. There's also a maximum number of investors that can be targeted. That is, that special purpose fund should be targeting 50 investors with a minimum subscription of 100,000 USD per investor. And that special purpose fund shall at all times be managed by a manager and be administered by an administrator in Mauritius. I think, like I've said, there are really these conditions that should be fulfilled for a particular fund to be classified as a special purpose fund. Thank you.
That's correct. And then to add on, the special purpose fund is exempt from income tax in Mauritius under the Income Tax Act, subject to meeting those conditions, as my fellow colleague has explained.
Brilliant. Thank you so much. Melis Tuna asks, it's been stated that the SPV could not function as a fund. Could you please clarify the main differences between the SPV and the sub-fund? For example, is there a limit on number of shareholders which could invest in an SPV compared with a sub-fund?
What happens in the fund structures, again, because it's important to really understand the fund structures. You're going to have the sub-fund operating as a CIS or as a closed-end fund. Then the SPV will be only holding a particular investment of that CIS or closed-end fund. So as investors, I'll be mainly subscribing into shares being offered either by the sub-fund, by the CIS, or by the closed-end fund, and not by the SPV. SPV is really, I'm going to use the word again, it's really incidental. That is, it's going only to be used as a special purpose for investments of the funds.
Superb. Thank you so much. Mohammed Peyre asks, could a self-managed expert fund apply for conversion into a self-managed VCC?
Yes. There's no restriction in terms of our funds being converted into the VCC structure, but definitely this is going to be assessed on a case-to-case basis. I think this is the important point that we need to highlight, because we don't want at the end to the VC structures to defeat the purpose for which the structures have been put into place.
Thank you very much. Irfan Hassani asks, it's understood that a VCC can have different sub-funds, and each sub-fund will have a different strategy and can be a separate legal entity. Given different strategies, there is a need for different portfolio directors which are specialized in their respective funds, e.g. one can be a hedge fund and the second a VC fund. Therefore, can each sub-fund have its own board of directors given the specific skills required to run the distinct strategies, and the board for then each sub-fund will then be distinct given the specialized nature of the strategy? So can the board composition differ between sub-funds having separate legal entities?
Yes, the clear answer is yes. So the legislation allows for the board of the VCC to be distinct from the board of the sub-fund. That said, we assume that we're referring here to an incorporated sub-fund. Because if it's unincorporated, then it's using the same board as the VCC.
Super. Thank you. Bismail Chadidi asks, what would you consider to be the advantages and benefits of using a VCC for investment fund activity compared to a company under the Companies Act?
I think that that issue has been, right from the beginning, we have been highlighting the advantages of the VCC. So essentially a company would be operating one fund, and here we're talking about one structure holding different type of funds. So it's essentially the flexibility that is a main advantage, and obviously which results in lower cost and lower compliance costs.
Super, thank you. Anton Falnikov asks, what differences and criteria are there between CIS and closed-end fund structures?
So this is given under Section 2 of the Securities Act itself. It is as per definition. The CIS is one which offers its shares to investors. So there's a large pool of investors, and the investors, they come in as participants. They don't have any control over the management of the fund, and that the fund needs to have a diversified pool of investments. Compared to closed-end funds, so closed-end funds, they need limited number of investors, and definitely. And then even the investment for the closed-end funds is going to be targeted to specific sectors. So these are the main differences, and like I said earlier, so it's clear under the Securities Act as well. Thank you.
Thank you so much. Kevin Virapen asks, can a PCC fund be converted into a VCC?
Absolutely, it can be converted into a VCC.
Yes.
We have already a number of cases that we have successfully, basically the applications have been successful, where basically the PCC is converted into a VCC and all the different cells are converted into different sub-funds.
Thank you very much. Boniface Mutisia asks, is it a requirement for a promoter or shareholder to be a resident in Mauritius? I mean, does one have to obtain an investor permit and so forth?
No. Mauritius is an international financial center, and we encourage global business. So basically, if a global business company is being set up, the promoters and the investors are expected to be basically not resident in Mauritius.
Thank you. We now have from Dirajan Ramaswamy a question to Mr. Soifu. In terms of taxation, will a VCC be subjected to the new / additional tax of corporate climate responsibility levy of 2%?
Yes, being a company, the 2% CCR levy will apply to the VCC, but the levy is only applicable to companies with a turnover exceeding $50 million. So that will be the case. Obviously, companies which have a partial exemption will have the effective rate being less than 2%. So it will be 0.4%. But yes, in a sense, it will apply.
Super, thank you. Vasudha Sigalam asks, what are the potential challenges or risks associated with operating a VCC? How can these be mitigated from a banking perspective? I don't know if one of our industry experts would care to pick that one up. Might I ask Mohit, what's your perspective on the challenges and risks?
Yeah, so I think I'll say purely from use case point of view, when you have able administrator locally present, and Mauritius, of course, like we deal through, in our case, Apex, then obviously the rights and the duties are very well defined through the board process for individual sub funds. And typically, that dual signatory mechanism typically takes care of those risks. So, one is, of course, each account, banking account is different for a different sub fund, right? And you can have controls in terms of how it is defined from approval authority point of view through the administrator. So I think that's reasonably easy to do, because locally the administrator's job, and they do it quite efficiently on the banking side, because the number of transactions even we go through sometimes runs into hundreds because of the investors we have, and we have never faced that issue if the delegation matrix and the approval authority is well defined.
Thank you very much indeed.
I'll just add to you.
Dave,
So,
oh yes, please.
no, I was saying, so to the extent there is separate legal personality, so there is zero risk of contagion across the sub funds. So can't foresee a risk from that perspective.
Terrific, thank you. Dave Sieberlook asks, if we have 100 sub-funds, will the FSC request creating a standalone company or operate under the MC itself?
Yeah. Right now, there is no capping in terms of the number of sub-funds or SPVs that can be created under a VCC fund. So right now, this is one of the key features that is being offered under the VCC structure for promoters to consider. No capping. Thank you.
Thank you. It's been stated that, I have done this one, my apologies. The list of questions is tremendous. So Amir Kamal asks, how will VCCs be dealt with in cases of insolvency or stakeholder disputes?
I think it will follow the same route of normal company. So if an entity is incorporated, insolvency would follow the same route of company, as it's a separate legal entity. And I guess that would be the case for the VCC if it has unincorporated sub-funds.
And I think I've only time for one last question, and I apologize to the questions who I haven't managed to get to. We've had a tremendous enthusiasm from the audience. Laksha, I'm going to get this wrong, Raghunandan asks, can a sub-fund of a VCC issue security tokens?
The answer is yes. We have issued, the FSC has issued security token offering guidelines, and according to this, security tokens can be offered, but it should follow the guidelines. So there shouldn't be any issue there. It's just, it has to be issued in line with the guideline that has been published by the FSC.
Thank you so much. Well, I want to thank our speakers from the FSC, from industry, from our tax experts for an absolutely fantastic hour and a quarter. The time has really flown by. It's been an extremely interesting subject, and as you can see, there are tremendous advantages in Mauritius to using variable capital companies. We've had great endorsement from practitioners, as well as an extremely erudite description from the FSC as to how you can set up a VCC, and we have also heard of the tax implications, as well as tremendous interest from the audience. I would just gently remind folks of some upcoming FS Club events tomorrow, next Tuesday, and next Wednesday. But most importantly, thank you so much to our speakers. Thank you so much to the audience. And I wish you a tremendously good rest of the day, afternoon, and evening, depending where you are in the world. Thank you so much for attending.
Thank you.
Thank you.